All right, if you've been keeping an eye on the crypto markets lately, you've definitely noticed that Ethereum has taken a serious nosedive. But this isn't just random price action. There's a real story being told on the charts, and today we're going to decode it together.
So the big question, the one on everyone's mind, is this. Why can't ETH seem to catch a break and stop falling? And believe me, it's not just market noise. There's a fascinating technical story unfolding here, and we're about to break down all the clues one by one.
Okay, so our first major clue comes from a classic, almost secret weapon in a trader's toolkit, Fibonacci levels. When these invisible lines on the chart break, it almost always signals a huge shift in momentum. And, well, that's exactly what just happened.
So what in the world are Fibonacci levels? Just imagine them as invisible rungs on a price ladder. They're based on this mathematical sequence you actually see all over in nature. Traders use them to guess where price might stop and turn around, mainly because, well, so many other traders are watching them too. It kind of becomes a self-fulfilling prophecy. And for Ethereum, a couple of those crucial rungs just snapped right off.
Let's get down to the details. Ethereum broke below a supercritical daily support level at $2,370. Now, in the world of technical analysis, that is a massive red flag. A price level that used to be a floor, holding the price up, has now flipped to become a new ceiling, actively pushing the price down.
And how do we know this wasn't just a tiny dip or a fake out? Well, the breakdown was confirmed by a massive 26.7% surge in trading volume. That tells you a ton of sellers were jumping in, aggressively pushing the price down with some serious conviction.
And this chart right here just puts it all together visually. You can see the price just slicing right through that diagonal support line, which, wouldn't you know it, lined up perfectly with those Fibonacci levels. It was a textbook technical breakdown, plain and simple.
Now let's move on to our next clue, because this is where things get even more interesting. Ethereum's problems didn't just happen in a bubble. A huge earthquake in the Bitcoin market sent shockwaves across the board that made Ethereum's fall that much worse.
It's so important to remember this. No crypto trades on its own little island. Bitcoin is the market's center of gravity. When it makes a big move, it tends to pull everything else right along with it. And that's exactly what we saw happen.
And here it is, the spark that lit the fuse. An absolutely staggering $150 million in long positions, which are basically just bets that Bitcoin's price would go up, were completely wiped out. That forced a ton of selling, which triggered this brutal cascade effect through the entire market.
This set off what's known as a volatility multiplier. See, because Ethereum is naturally a bit more volatile than Bitcoin, it amplified that downward move. The easiest way to think about it is this. Bitcoin sneezes, and altcoins, like Ethereum, catch a really, really bad cold.
So after those two major haymakers, where does that leave us right now? Well, what we have is basically a standoff. It's a battle between the buyers and the sellers, and it's being fought over some very specific, very important price zones.
This table here basically maps out the whole battlefield. The immediate line of defense for the buyers is $2,158. That's a key long-term average price. If that line breaks, we look to the next support, which is more of a psychological one, at $2,100, and for the really long-term investors, that $1,500 range is where they might start seeing some deep value. On the flip side, the bulls, the buyers, they need to get back above that $2,370 level to really regain control.
All right, so we've got the clues, we've got the map of the battlefield. Now let's look at the three most likely paths that Ethereum could take from this point, so you can become an informed observer of all the action.
So you can see everything really hinges on that 2158 level. The bearish path, that's the red one, happens if the price breaks below it and starts targeting those lower levels. The neutral path, in yellow, is kind of just a choppy sideways grind if that level manages to hold. And that bullish green path, well, that only really comes into play if buyers can somehow find the strength to push the price all the way back above 2370.
And if we pop back to our chart for a second, you can see these scenarios just visualized perfectly. That red arrow shows the path of a confirmed breakdown, while the green arrow shows what a potential recovery might look like. It's all laid out for us right there.
And finally, let's zoom all the way out. There's one more really important piece to this whole puzzle, and it's a big one. It might be the single most important factor that could decide Ethereum's fate for the rest of this quarter.
We have to remember, this isn't just a crypto story happening in a vacuum. There's what we call a risk-off mood across all global markets right now. That means investors are nervous, they're getting scared, and they're pulling money back from anything they see as speculative, like crypto. This creates a powerful headwind that's pushing down on the entire sector.
And honestly, this quote from the source material just says it all. Everything, and I mean everything, boils down to this one number. Whether the buyers can defend that $2,158 level or whether the sellers finally break through it, that's what's going to set the tone for weeks and weeks to come.
So we're left with this question, right? Is this a necessary, painful market cleansing that had to happen before the next big move up? Or is this a serious warning sign of a much deeper slide to come? The charts have given us the clues, and the answer? Well, it's going to be written at that $2,158 level, so keep your eyes on it.